So formally, before starting today's lecture, let me just recap for just 10 to 15 seconds of what we have covered up till now in audit risk. In audit risk, I have explained very well the concept of what is meant by the word audit risk. You have understood it very well. What is the reason behind audit risk? What is meant by the word audit risk? Audit risk means that the auditor would give an inappropriate opinion. That is the risk when there is a mistake within the financial statements. Now, this risk arises because of different reasons. One is the ROMM, risk of material misstatement, and the other one was the detection risk. The risk of material misstatement is linked with the company itself. This is what the company can control, and the risk of material misstatement arises because of two different things. Either it would be an inherent risk or either it will be a control risk. Control risk means that internal controls of the company are not working great. That is why there would be errors within the financial statements, because those internal controls will not be able to stop any kind of mistakes, fraud, errors, misstatements that are going into the financial statements. Inherent risk means that any other reason other than internal controls, if there is a risk that financial statements might be incorrect or have a misstatement in it and it is controllable by the company, it is known as an inherent risk. An example, the company's management does not have integrity. This is an inherently risky company because a lying management would also lie within the financial statements. This means that the financial statements would have a lot of misstatements. We are done with the ROMM side, which is also known as ROM side, risk of material misstatement. Now let's move towards the detection risk side. Detection risk means that the auditor will not be able to detect the misstatements within the financial statements. Now, detection risk arises because of two separate reasons. Either it would be a sampling risk, which means that the sample which the auditor has selected is not representative of the whole population, and either it would be a non-sampling risk, which simply means that any other reason other than sampling, because of which the auditor would not be able to identify any kind of misstatement, is known as non-sampling risk. Got it? After
Yes.
that, we have covered up how do you solve the questions of audit risk within your exam. We have covered up materiality as well, the RAP model of materiality, which stood for revenue. Revenue materiality starts from 0.5%. A stands for assets. Assets materiality starts from 1%, and then comes the final one, that is profit before tax, whose materiality starts from 5% or above. That's it. And I have told you this concept that you need to understand it very correctly. If the risk is high, materiality has to be on the lower side so that you would test more transactions. That is something that you also need to understand. And I have explained it in the previous lectures as well. When we were completed that, when we were done with that, I came towards a very simple thing, and I told you that you need to understand two very specific words. What is meant by the word overstatement? What is meant by the word understatement? What is the company more prone to overstate? Which were revenue items, anything income related, assets, revenue? This is something that the company is by default, the management is by default prone, and they want to overstate it. An understatement means that the company will deliberately write something below what is actually to be recorded. And what does the company is more prone to understate? That is the liability and all the expenses within the profit and loss statements. I told you that within the exam, you need to have a concept of the word overstatement and understatement, and you need to use it within the exam as well. But in case you don't know what is happening here, either is it overstated or understated, there is a separate word which we can use, which is known as misstatement as well. When you are not sure whether something is being overstated or understated, when you can't find it out, then you write down that it is misstated. Got it? After completing this, I came towards very simple concept and I gave you a hack, basically how to, no, not a hack, gave you the proper pattern to solve the exam question. How to solve the exam question of audit risk. I explained it in too much detail, which we are also going to use today. After this, I gave you a homework, which I asked you to search about it, try to solve it. And if you face any kind of issues, you can ask it from me upon WhatsApp. Got it? And finally, I gave you a very, very important hack for the audit exam as well. I gave you a total bunch of, I think so, 20 or 22 different risks that are repeated in almost every single question. If you read this, then it is going to become easier for you to identify those risks from the exam questions and write about them within the exam scenario. Now, I can understand that some of these risks, some of these hacked risks are some that you won't understand at the moment. But as we move towards the questions, I have chosen specific questions in which majority of these hacked risks will be covered as well. So it will be easier for you to understand them practically while we are doing a exam question. Now let's come towards the exam question. The question that I'm choosing today to solve within this specific lecture is Magpie Corporation. It is a past paper question. It is a very important question. And it is not that much difficult. It is not that much technical, but it has a lot of parts to it. Before reading any kind of question, I've repeated it again and again that before going towards the scenario, before reading the story that is given to you, always directly move towards the requirements and understand what is the examiner requiring from. So if I come towards requirement number A, what does it state? Explain the purpose of an engagement letter and list 4 items which should be included in an audit engagement letter. I think it is easier to solve for you because we have already covered up this portion within ethics chapter number 4, I think it was. We have covered up what is an engagement letter. I have explained it. So this is rote learned, and you can easily score 4 marks by writing it down. What is an engagement letter? What was the purpose of engagement letter? Basically, there were 3 purposes: to reduce the misunderstanding between the auditor and the management, blah, blah, blah. There were 2 other points. Then what were the items that are included within the engagement letter? There was a whole list of items. You can choose any 4 from those specific list and write it down. This is a rote learned part. So we are not going to move towards it. Now let's come towards the B part. This is also something that we can solve now. Using the table below, calculate the following 2 ratios for both years to assist you in the planning of the audit of Magpie Corporation. Very easy, 2 marks within the exam. You just need to calculate these 2 ratios. So how am I going to calculate these 2 ratios? I don't need to move towards the start of the question. I just need to look where has the financial information been given to me, because I also need to save time within the exam. Directly come towards the financial information. Okay, here I have the financial information for 2 years, 2015 and 2014. For which year do I need to calculate these ratios? 2015 and 2014, both years. So let's first calculate the ratios for 2015. I need to calculate operating profit margin, OPM. How do I calculate operating profit margin? Operating profit divided by the revenue, which is 22 million, multiplied by 100. Simply do this calculation. I'm going to open up my calculator and perform it really fast. That is 0.4 divided. Okay, by the way, you
Do
don't
I
add 0.00000. Just simply 0.4 divided by 22, what the figures have been given to you. The answer would always be the same.
no, can I say something?
Come again, please.
Do I give the answers in million? Do I have to write it down, or can I just write it like this?
If I do this, for example, what is meant by million? What is meant by million? Divided by 22 million. Multiplied by 100. Or if I do this 0.4 divided by 22 multiplied by 100. Please calculate this and tell me, is it any kind of different?
It's the same. It's the same. Can you hear me?
Yes, it is the same. So instead of writing down all the zeros, I can just calculate using the smaller figures, because on calculator, I will have to write so much zeros down. It is going to take a lot of time. I have to save the time within the exam. Remember, every marks only has 1.8 minutes. So as much time as I can save in the easier parts of the question, it is going to give me 1, 2, 3, 4 extra minutes for the lengthier part, which I need to save. Got it? So my answer for this would be 0.4 divided by 22 multiplied by 100. For 2015, my ratio stands at 1.8%. 1.8%. Now let's calculate the same ratio for 2014, which is 1.2 divided by 26 multiplied by 100. The revenue is 26. The net profit is 1.2. 1.2 divided by 26 multiplied by 100, which goes to 4.6%. So I can just clearly see that the company's profitability ratio, the net profit margin ratio, has fallen down. In 2014, they were making a higher profit margin. In the current year, their profit margins have gone down. Does this give me any kind of specific risk or information? No. Up till now, I can't create a risk from just one ratio. So leave it as it is. Let's calculate the payables payment period. What is the pay? How do we calculate the payables payment period? I need to have the payables for 2015. I have the payables 1.9, and at the same time, I need cost of sales. I have the cost of sales right here. So how am I going to calculate it? 1.9 divided by 10.9 multiplied by
Times 365.
365. 1.9 divided by 10.9 multiplied by 365, which comes to 63 days. I'm taking 63 days in 2015 to pay back to my payables up from the date I bought products for them. Let's calculate the same ratio for 2014. 3.2 divided by what is the cost of sales? 14.5 multiplied by 365. So 3.2 divided by 14.5 multiplied by 365. My answer is 80 days. So basically, my payable payment days have gone down. So can I create any type of risk here just by looking at
Wait.
ratio? Come
No.
again, please.
No.
No, because I have told you many times, don't just jump into it that there is a risk here. Maybe there is not. Well, first of all, even if the payable days were increasing at the moment, I would not just go ahead and simply write down that, oh, the payable payment days are increasing, blah, 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 blah. The company is facing going concern issues. Maybe they are delaying the payments deliberately. They have a lot of cash. I need to look at the whole question. Maybe within the story side of the question, I'm given something else. I need to relate the story with the ratios as well, which I calculate with the financial scenarios that I have. So I don't need to look alone at the story and the ratios. I need to create a communication between them. I need to create a risk by taking both of them into account. So my ratios are done. I'm done with this part. Apologies. And if I look at the question, oh, the examiner has already given me some other ratios as well, by the way. Great. He has given me gross profit margin, which is increasing. He has given me inventory holding period. Oh, I'm holding inventory for more days now. So by default, I have a risk in my mind that maybe inventory is overstated because there would be obsolete products within the inventory which the company is unable to sell. This is why the inventory days have gone up. Hence, the inventory is overstated and the relevant expense of writing down the inventory is understated. But whatever the case is, I will ignore it for now. I'm just creating an understanding by looking at the ratios. But there is something that I cannot ignore before starting this specific question. We will come to it, but let's look at the receivable collection period as well. In 2014, my receivables were paying me in 101 days. In the current year, they are paying me in 149 days. So my receivable balance is increasing, which shows that customer is taking longer to pay me back. And there was a scenario which I told you about, that if a customer is taking longer to pay you back, this means a bad debt should
write
be
it off.
against them. And there is a risk that the company has not recorded this bad debt up till now. So just by looking at these ratios, apologies, just by looking at these ratios, I think right now in my mind, I have at least two risks at the moment within my mind against which I can write clearly, against which I can provide a clear response as well. But am I going to write it down as a student while sitting in the exam? No, not right now. Don't rush it. I will wait for it. This is my safe zone. I have the two risks at the moment in my hand. Okay, let me create another risk because I told you something about revenue as well. I can see that the gross profit margin is increasing from 44 to 50%. What is gross profit made up of? Revenue minus cost of sales is equal to gross profit. So gross profit divided by revenue is gross profit margin multiplied by 100, obviously. So either the revenue is increasing by too much, this is what I think, or either the cost of sales is not increasing as much as the revenue has increased during the year. This is why the gross profit margin has gone up. So there may be a risk there as well. Can I verify what I just claimed? Is there any kind of evidence what I just said that this might be the case here? Let's look at the financial information. Am I given this? Oh, yes, I have been given this information. So why don't I just hurry up and calculate this as well, that what is happening with revenue and cost of sales, because we know that these both are linked with each other. So let's calculate it. How much is the revenue increasing by? Oh, by the way, it is decreasing. Revenue is decreasing from 26 million to 22 million. Okay, what is the total amount of decrease? The revenue is decreasing by 4 million. Previous year, the revenue was 26 million. Multiply this by 100. We will find the total amount, total percentage by which the revenue has decreased. 4, that is the decrease in revenue, divided by 26 multiplied by 100 is equal to revenue has decreased by 15%. Let's look at the cost of sales. The cost of sales is also going down. It's also decreasing by from 14.5 million to 10.9 million. What is the total amount of decrease? 14.9 minus 14.9 minus 10.9. The cost of sales that also decreased by 4 million. And if I want to find the percentage by how much it has decreased, what was the previous year's cost of sale? 14.5 million multiplied by 100 is equal to what is the total percentage of decrease? 4 divided by 14.5 multiplied by 100. 27%. So overall, oh, this is something bad. If the revenue is decreasing by only 15%, why is the cost of sales decreasing by more than revenue? Because if the cost of sale is decreasing more than revenue, it would obviously result in a higher gross profit margin as well. So in my mind, I have this risk as an auditor as well, that maybe, okay, the revenue has decreased. I have no risk in that. It's okay. The revenue can decrease. It is not moving by too much. But when I look at cost of sales, it is decreasing by more than revenue. It might be the case that the management has recorded a lower cost of sales so that the gross profit margin could be higher. So it can present a healthier picture to the users of the financial statements or the stakeholders of the financial statements overall. So again, I have found the third number of risk as well without even moving towards the scenario at the moment. Can I do any other comparison using my own mind, using the financial information? I have already calculated inventories. It has been calculated for me. I don't need to go back to it again. Let's look at receivables. It has already been calculated for me. We are not going to move towards it. Let's look at cash in hand. Oh, by the way, the cash in hand is decreasing from 4.2 to 1.3. We will see about it how we use this decrease in cash information as well to create a risk. Not right now, but for the moment, I know that my safe zone is that I have already identified 3 risks which I can clearly write about. But right now, I'll ignore them. I just have it in my mind. It is a safe zone for me. Now let's move towards the actual question where the examiner is requiring audit risks. What is the examiner saying? Using the information provided and the ratios calculated using both, describe 7 audit risks. So examiner has clearly stated that I need to write down only 7 different audit risks, not less than 7, not more than 7. So if within the question, I identify, let's say 8, 9, 10 different risks, I'm not going to waste my time. I will only write down 7 risks and move on towards the next question. Great. Got it? Let's move forward and explain the auditor's response to each risk. Again, we also have to provide a response in planning an audit of blah, 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 blah. We don't need to read that information. The examiner has given me the way I will have to write down my answer. This is the same way I told you. You will have to make a table, blah, 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 each and everything. Now let's move towards my answer sheet right here. Let's move towards the answer sheet. And let's create a table. Before creating the table, how am I going to start my exam question always? I'll write down the name, Magpie Corporation. That is the name of the question. And which part I'm solving right now. Obviously, I will also solve this part B within my book as well, within my answer sheet as well. But we have solved it right here. We don't need to write it down there as well. I'm solving right now part C. So in bracket, I will write down part C and go further towards making the first table. And how do I make the table? Oh, give me 1 second. Let me insert the table of 2 by 2. Let me put my picture back up here. Okay. So my first heading would be audit risk. This side would be audit risk and the other side would be response. Instead of writing down auditor's response, I can also simply write down response. That is enough. So I will press tab, go to the next tab and make this a bit better for the examiner, bit presentable for the examiner as well. So my question starts from here. I already have 3 audit risks in my mind. I'm not going to waste my time writing that down because that is my safe zone. Let's move towards the story now and let's start reading this story first of all. Okay, it is 1st of July 2015. You are the audit supervisor at Crow and Corporation. All right. The examiner is basically right now telling me who am I? Who am I within this audit? I'm an audit supervisor. This information for me is of no use. And you are finalizing the planning for your new client, Mac.
Or risk new client.
Okay, you are finalizing the planning for your new client, Magpie Corporation, for the forthcoming audit for the year ending 31st of July 2015. Basically, this information is also somewhat important that the year end is this date, but it is more important for AAA exam, not that much important for AA exam. So you can skip this.
Okay, but there's one risk there. Are you
Okay,
identifying the risk
so
right now or
this is a
later?
new client. And the hack that I shared to you stated that whenever an auditor is auditing a new client, there is always a risk. What is the risk? The risk is
But
not
you
that
don't
the
know
financial statements
the
might be
accounting
incorrect.
treatments.
The risk is that the
Mhm.
auditor might not be able to identify any kind of
Right.
misstatements that would be
Deduction
there
risk.
within the financial statements. Why? Because the auditor has
Because
no knowledge or past experience of this client. He does not know is this management integrity still there or not. He does not know any of that. There is another risk because you were not the auditor for this company in the previous year. The previous year closing balances would be the opening balances in the current year, right? There is no confusion in that. The closing balances of the previous year in the balance sheet, they are always the opening balances for the balance sheet of the current year. Then the additions, deletions, and all the movements, and then the closing balance of the current year always comes out. You know how the P accounts work. You find out the opening balance first of all, then you make all the debits and credits, and then you have the closing balance. So the auditor was not the auditor for the previous year. The closing balances of the previous year were audited by someone else. What if, what if the management gives you current year financial statements which have incorrect opening balances? They are not using the opening balances which were confirmed by the previous auditor or audited by the previous auditor. What if the management tries to say that, oh, this is the figure that was audited by the previous auditor as well? So there is that risk as well. Management may try to do it. And within the hack, if I move towards the hack, obviously I'm not going to write exactly just like the hack right here. We will change the wording as we want to. What does the hack say right here? This is the first year audit that the audit firm has audited this client. There is a lack of cumulative audit knowledge and experience, increasing the detection risk. Opening balances may be misstated as the audit firm did not conduct the audit last year. So instead of too much detailed explanation, it is a more better explanation to save your time as well. So how am I going to write it down if I'm sitting within the exam? Because as a student, I know that I haven't learned every single thing. I just have the idea that this is a risk. How am I going to write down in my own notes? First of all, there will be repetitive nature of these kinds of risks. So your hand is going to become open. It will be easier for you to write down. That is the first reason that you will be very fluent in writing any kind of risk down. The second reason is that you will have to use your mind, use your knowledge as well. So let's write it down the way a student would. There is a risk. First of all, let's look at the way I told you to write down the risk. How do I always write down the risk? First, you have to mention which items are at the risk of under or overstatement. In this example, there is no such thing where I would state this is at the risk of overstatement or understatement. There is an overall detection risk that is going to happen. So my wording is going to change here. I will state that there is a risk that the auditor will
No,
not
wrong place.
be able to
Wrong place.
identify. Oh, sorry, I'm writing it down in the wrong place. There is a risk that the auditor will not be able to identify the misstatements within the financial statements. So this is my opening part. I have stated what is the risk here. What was the second part of always answering my question specific, mentioning the scenario, mentioning the specific standard. But because there is no standard linked with it, I can directly move towards the explanation of why I think that there is a risk. Now, why do I think that there is a risk? Number one reason is that the auditor does not have enough cumulative knowledge. Number two reason is that opening balances of the current year's financial statements may be misstated as well. So I
You
will
have to give 2 points.
yes, it is better to write down the both points. Okay.
Cool.
You will only gain 1 marks for it, but write down both points. The risk exists because the auditor, no, because we don't have enough cumulative
We are.
experience and knowledge of this audit client, and also that the opening balances of the current year financial statements may be misstated. Hence, the auditor may not be able to detect the misstatement. So my explanation part of why I think there is a risk is done. Got it? Now let's move towards the response part. Now, within the hack that I provided you, I have given almost 2 to 3 or even one different responses for every single risk. Within the exam, you don't need to write down 2 responses. You only need to write down 1 response. But in this case, I have identified 2 separate reasons why I think that there is a misstatement. So in the exam, you will not have to do that. First of all, within the exam, you will also only need to write down 1 reason. Just for the sake of understanding, I have written down 2 reasons. So I will also give a response for both of these reasons. Got it? So what is going to be my response in reason number 1? Why I think there is a risk? What is going to be my response for that?
Experience
I can
team.
ask for no breakup.
Of time.
I can do nothing there. I cannot ask the management to give me something because I don't have cumulative knowledge of the client. What is better way to do something? To test more things. Because if I test more things, this is going to reduce the risk overall. I need to be more professionally skeptic. Ask questions about any single thing that I think that is going on wrong. Don't ignore anything. So my response, first of all, would be that the auditor should be more skeptic, skepti, skeptic during the audit of Magpie Corporation, Magpie Co, and also test more samples to reduce the detection risk. Now, if I come towards the head, what have I given you there? What do you need to write down? More time and resources will need to be devoted to obtain an understanding of the client at the start of the audit. More substantive procedures will need to be planned and performed in larger samples testing. Overall, you can also write this down, but learning this is quite difficult. This is just giving you an understanding. So instead of writing this down, if I only write down that more sampling should be done, you should be more skeptic. I can also write down that the audit team should also have more resources so that they can perform the audit while maintaining the audit quality. Got it? So this is how I'm going to answer, because obviously I cannot learn every single thing from the scenario, from the thing that I've given you, from the hack that I provided you. I can't learn every single. It is impossible to do so. But gaining an understanding and writing the proper thing that is going to give you marks, pick out the answer right now. The kit's answer that the examiner has written down against Magpie Corporation, against the new client risk. Pick out that answer. Spot out what kind of response has been given by the examiner there. It will be completely different from the response that I'm writing right down here. It will be completely different. My goal or a student's goal is not going to make sure that my answer completely matches with the answer what is written by the examiner. No, that is not my goal. My answer will always be different from what the examiner wants me to answer. But if your answer is providing the right explanation, the right response to the thing that you have identified, you will be given the marks for it. This is what the AA examiner wants as well. Got it? Now, again, let's come towards the second thing. The second thing because of which I thought there was a risk is that opening balances might not be correct. Why? Because we were not the auditors for the previous year. So the management can say that opening balances are correct, even though they may have deliberately misstated the opening balances in the current year's financial statement. So how can I manage that? How can I reduce that risk? What can the audit team do in order to provide a good response to this? What we can do is that, first of all, I can tell the management to give me the last year's audited financial statements on which the auditor has signed. So in other words, I'm not going to write down, ask the management to give me the financial statements on which the previous auditor signed. I will simply write down, ask the management to give me the previous year's audited financial statements and then compare the closing balances on those financial statements with the opening balances of the current financial statements. They should match. Understood?
Yeah.
Great. So I'm going to write down simply that the audit team should also ask the management to provide them the previous year's audited financial statements, and then compare the closing balances of those FS. You are in the exam, don't write FS. This is something that I'm just reducing my time right now to write FS. Write the full financial statement down of those FS to the opening balances of current year's FS. Now, a better response would also say that what if there is a difference? Obviously, I need to give a response to that as well. So what if there is a difference? What if you identify that, oh, this is not correct? It is a simple hack. You can always write down, discuss with management why there is a difference. Just ask from this management. You will always write down within the exam. So
Huh?
if there is a difference, discuss with management the reasons for those differences. The management should just let you know why there is a difference between the opening balance, closing balances of the previous year and the opening balances of the current year. Got it?
Yeah.
Great. Now let's move. I have already done first risk. I only need to write down 6 more risks. Remember, I already have 3 risks which I have identified in my mind. So there is a safe zone that I am in right now. 3 risks are already the ones that I have identified. Let's move forwards towards the scenario. Let's move forwards towards the story. And we have already read only the first paragraph. And I've already identified 1 risks right here. Let's read forward. Magpie Corporation is a retailer of garden supplies. Now the examiner is basically giving me what does this company do? Their introduction right at the moment. Magpie Corporation is a retailer of garden supplies which operates from 20 stores across the country and employs 400 staff. Is there any kind of risk here? No, there is no kind of risk at the moment. I'm just receiving information that I need to have. That's it. The audit manager has attended a meeting with the finance director and has provided you with the following notes of that meeting and the financial statements extracts. Basically, the examiner is stating, I have given you the financial statements, and we know we have the financial statements because we have identified some risk from there. And what was discussed within that meeting is given within the story. And I told you that before starting the audit team and the management of the company always sit down and discuss many different things, which is known as a kickoff meeting in professional life with the client. And during this kickoff meeting, we identify audit risk. We write down every single thing that the management is saying. And after the meeting, we identify, okay, here there would be a risk, here there would be a risk, here there would be a risk from the discussion that we have had with the management. Okay. Now, what questions you ask from the management, that is not a part of syllabus of ACCA. That is something that you will learn within your practical life. Because only if you know what questions you have to ask, you will be able to receive the right information from which you will be able to identify the risks. So that portion is not within the course of ACCA as a whole. Got it? All right. Notes from the planning meeting. What was discussed? During the year, the company spent 0.75 million on refurbishing its stores to improve the customer experience. Okay. The company has spent $750 million to
I know the
refurbish
risk.
their stores. No. Don't move towards it right now. I know what you are going to do. You are simply going to say there is a risk. But no, I haven't read
No,
it.
I was not going to say that.
What is happening at the moment? I haven't read.
Oh, okay.
Okay, what is happening right now? I need to discuss that as well. All of this expenditure has been recognized in the statement of financial position as property, plant, and equipment. What is meant by this? The company has capitalized all the 700.
Capitalize. Yeah.
There may be some paint job that you might have done. There may be, when you talk about refurbishments, majority of the expenses would be to repair the things. And repair and maintenance expenses are known as revenue expenditure, which has to be always expensed out in the statement of profit and loss. They do not need to be capitalized. So there is a risk here. I'm not going to say that all of this $750 million is $750,000 is directly just a revenue expenditure the company has done wrong. No, I will just
Yeah.
state that there is a risk that the expensed capital, there is a risk that the property, plant and equipment, which item is at the risk of under or overstatement, property, plant and equipment is overstated and the relevant expense is understated within the statement of profit and loss. Because I don't know the name of that expense, which expense would be understated or understated, I will just simply write down the relevant expense. The expense that should have been recorded is understated within the statement of profit and loss. So this is my opening line at the moment. Let's move towards my answer sheet directly. I'm going to write down there is a risk. Now, obviously, I don't want to mess up the way I always answer my questions. I'm following my approach. First, I have to explain which items are at the risk of under or overstatement. So let's write that down. There is a risk that PPE is overstated within the statement of financial position and the relevant expense. Why am I writing relevant expense instead of stating fully which expense was it? I don't know the name of the expense. And as a student,
Revenue.
you won't even know the name of the expense. So instead of writing something down, unprofessional words, using unprofessional words, simply write down the relevant expense, which means that the expense that should have been recorded is known as the relevant expense. The relevant expense in the statement of profit and loss is what? It is not recorded because it has been capitalized. It is understated. Any questions?
No.
Okay, great. Now let's move towards the second portion of how I need to write down my answer. I need to mention the standard here. What was the name of the standard? As a student, I don't know the thing that you told me, but let me tell you, it is IS 16. But if
Yep, I
I
knew
was a
it,
student, I
actually.
would have write down this is what IS 16 states. Because you are a student, you don't know what standard it is. You will write down accounting standard states that only capital expense can be capitalized and revenue expense should be expensed. I can write down as well. This is also correct. No issue in that. So instead of specifically mentioning IS 16, you can also write this down. Accounting standards state that capital expenses can only be capitalized, whereas the revenue expenses must be expensed and not capitalized. Okay, I have given the standard. Now, what was the part 3 of it? I had to explain it in my own words. Why I do think that there is a risk. So, what is the reason behind this? Why did I think of this? I thought that the $750,000 that the company has spent on refurbishment may include some or all of it might be revenue expense. It might be repairs and maintenance done all on the stores. So it should have been expensed out, whereas the management may have capitalized this expense. So this is why the risk exists. I just need to explain it in my own words. The above risk exists because the 750, instead of writing this down, I can also write down 0.75 million that has been capitalized by the company may be partially or in full be related to repairs and maintenance on the stores and should have been expensed out by the management, but it has been capitalized. So my reason for why I think that this is a risk has been fully explained. So for sure, I have gotten 1 marks for this whole explanation from this point, identification of the risk, to the explanation of why I think that there is a risk and mentioning the standard. The examiner has given me 1 marks for it because my explanation is 100% correct. It does not match with the answer. I don't care about it. What I know is that what I have written, it is correct. And that my tutor says that it is correct, then there is no issue. So now let's come towards my response. What is going to be the appropriate response here? Instead of looking at the head, I know I have given you a head. You can use that. But you should
I
be,
know it.
yes, but you should be able to generate all the types of responses yourself. So what do you think is the appropriate response here? Please give me the answer.
To ask the management to give you a breakdown of the how much you spent, of what they spent each month.
Yes. So
Breakdown
partially,
of the cost and identify if it's revenue.
you are 100% correct. I will ask the management to give me the breakup of this $750,000 expense. And by breakup, I need invoices. I need some kind of, I can't, like, I need breakup. How am I going to check that whether it is a revenue or capital expenditure? You know that in invoice, it is written, this is what you bought. So I need the breakup, and against the breakup, I need invoices. I'll then check those invoices on a sample basis again to check whether the expense capitalized is correct or not. And if anything I identify that was not capital expenditure, which should have been expensed out, I'll simply discuss with management that this has to be reversed. This has to be expensed. That's it. So how am I going to explain it? I will write down the audit team should ask the management to provide the breakup of this expense and then check the invoices of this expense. Again, auditor does every single thing on a sample basis. So here I will also do it on a sample basis. On a sample basis,
Wait,
yes.
what's the breakup of the expense? Is that not the invoice?
Breakup of this amount. I'll write down breakup of.
Yeah.
Okay, okay.
No,
Sorry.
like what I'm saying
My
is
English is
that
not
like different
correct.
from the
My English is
invoice?
not correct. You are 100% right. I'll correct it. Breakup of this amount. Got it?
No,
Is it
no, no,
correct?
not that. What I'm saying is
Yes, yes.
the breakup of this amount. Like, is that different from the invoice, or do they like store it on a different book or something?
Okay, okay. Let me ask you something. $750,000. There would be different types of services or things that the company would have bought, and all of that combined is 750,000, right? Yes?
Yes.
Yes. So I am telling the management that please let me know. Obviously, you have the working. You have calculated the total balance of $750,000. So somewhere in your Excel sheet or somewhere on a piece of paper, you would have written down shoes, paint, refurbishment, desks, windows, cleaning, blah, 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 blah. Every single thing is written down and then a total balance is written against it. Like this. Let me show you how. So management on a piece of paper, obviously they would have done this. How would have they calculated the total balance? They would have written down paint, that is for $100,000. And I have the invoiced against it. Then there is, let's say, boards, decoration boards, which I bought $50,000. So then there is, let's say, windows, which we have again bought new, which are for $100,000. So this like this, there would be a breakup, and the total amount management would have calculated would be like this. So I will first tell the management to give me this breakup. Otherwise, how would have they calculated the $750,000 total? They can't just sit there and do pat calculator. They can't do it on their calculator and just write it down within the financial statements. Obviously, it is a company. Everything is done professionally there. Every record is maintained. So there would be a breakup for this amount. And then I will look at the breakup of this amount and ask the management, give me the invoice for this paint. I need to look at this invoice. I need to take a look at this invoice. What is written within this invoice? Like I will identify within this invoice, it is written old paint was removed and new one was installed or painted. Then this is a repair expense. Repairs and maintenance. You are maintaining the building. So I'll check the invoice then on a sample basis against each of these amounts. Got it? Understood?
Okay.
So this
On
is
a
how.
sample basis.
Come again. I'm sorry.
On a sample basis.
On a sample basis, I can't check. What does the auditor do? The auditor never does 100% of the things. You should have that knowledge by now. The auditor never checks anything out on a 100% basis. He does every single thing on a sample basis. So always use this word. Check it on a sample basis. Check it on a sample basis. Got it?
Okay.
Great. On a sample basis and to identify whether the management has capitalized the correct amounts, whether the management has capitalized the correct capital expenditure, and if not, then discuss with management the reasons why they have
So
capitalized
everything I just say,
revenue
okay.
expense. Yes, every time you can say, obviously, if there is something wrong, you also need to let the team know that what is going to happen. Now, you don't know in detail what is the team going to do if something is wrong. So within the F8 syllabus, we always write down that ask the management, why is this not the case? Discuss this with the management. Got it? Any questions?
No.
Great. Let's move forward. All right, let's move forward now towards the next part. Basically, let me correct the spelling mistakes first of all. All right, let's move forwards towards the next portion from where we left it from. What does it say? In addition, the company has also installed a new sales system during the year which record all sales and receivables. Now remember all
These
this.
questions are so similar. Okay.
Always remember this.
Okay.
Although you are not going to identify any kind of a risk here, but there is always a risk whenever the company is installing a new kind of software. Because within the questions of audit, the examiner is going to test you in every single way possible. First of all, he is also going to test you in terms of new kind of systems because this is happening right now in all over the world. So you must know about it. Whenever a company is installing new kind of a system, there is always this risk that maybe the old system was correct, it was recording correct things, it was like not misstating. But what is this system recording, by the way? The new system is recording all the sales and receivables. So what the system is doing, it is automatically recording what sale we have made and what receivables do we have. So what if there is something wrong with this new system which you have not tested out at the moment, which you might have not have tested out at the moment? There is always this risk, because if there is something wrong with the system itself, your sales would not, I can't say whether it would be misstated or overstated. I can only say that it would be it would be overstated or understated. I can say that there would be some kind of a mistake in your sales, there would be some kind of mistakes within your receivables, the balances may not be correct. Why? Because there is some kind of error within your system, the code is wrong, the system is incorrect, you have not tested it. So before writing it down, let's read forward. What does the examiner say? The system enables daily sales from each store to be reported to the centralized finance department at the end of each working day. As the system is from a market leading provider, it was not felt necessary to run the old system and new systems in parallel. And always remember this as well. Whenever a company is installing a new system, there is a term known as parallel testing. What is meant by the word parallel testing? You don't need to
Old
write it down,
system
just
and new system going together.
run the new system and old system together for at least, in terms of audit, for at least 12 months, for 1 year old. And every single transaction that is happening must also be recorded in the new system and the old system. We have ran this old system, you have ran this old system for, let's say, 20, 30 years. So we know that this old system is correct. What is happening in parallel testing? You are also recording the transactions in this new system right now and in the old system as well. So if there is any kind of error within the new system, it would be automatically identified because the old system would be recording it correctly. So for example, you are debiting and crediting something and the new system is not recording it, but the old system is recording it properly. So now this is how you will identify that there is some kind of error within the new system. But this company has not done the parallel testing at all. So now there is a high chance that the new system might have some kind of errors in it, because of which the revenue and receivable might be misstated. I can't say whether it would be overstated. I can't say whether it would be understated. Only I know is that the balance would be misstated. So now let's come towards the explanation. Let's come towards the step number 1. Which balances do I think are at the risk of under, over, or mistake? Receivable,
All.
sales directly. And what is sales? It is revenue. So there is a risk of misstatement of revenue and receivables within the statement of financial position and within the statement of profit and loss. That's it. I'm going to write down there is a risk of misstatement of revenue and receivables within the statement.
Why only those specific two?
Sorry, come again.
Why only those specific two?
Sorry, I did not understand your question.
No, like why only receivables and revenue, not the other
Because
ones?
the new system, obviously in the question, you will always be given that what is the new system doing? So if this new system was only talking about receivables right now, because what is this new system? See, the question is stating itself. This new sales system only deals with sales and receivables. So only
Okay.
they too would be impacted, right? Nothing else is linked with this system. So
Okay.
I'm not in a position to say that the whole financial statements would be misstated. Why? Because the system is not linked with the whole financial statements. The system is only linked with receivables and sales. That's it. Got it? That is why I said that's revenue and receivables.
Okay.
Revenue and receivables within the statement of profit and loss and the statement of financial position. Great. Now let's come towards the point number two. What was step number two to explaining the risk? I had to explain the specific standard. Is there any kind of standard related with the system? No, there is no standard link with it. I can't say that IFRS 15 says that revenue should be recorded, blah, 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 blah. No, that is not the risk here. The risk is because of the system. There is no standard linked here. So I can completely ignore that step. And the examiner knows it. He's not going to deduct. He will not be deducting the marks for it. What? Let's come towards the point number three. I need to explain on my own words, why do I think that there is a risk? Let's explain it. The above risk exists because the company has not performed parallel testing of the new system, and the new system might have undetected errors in it, which would misstate the financial statements, which would misstate not the financial statement, which would misstate the revenue and receivables in financial statements. That's it. I have
I
given.
think you say.
Yes, come in.
So like do you just are you just saying you didn't do parallel testing like in a question where they didn't talk about parallel testing, do I still have to say that?
Sorry. Please ask the question again. I did not
In a
understand.
question, or no, what I'm saying is in a question, if they don't talk about the parallel testing, do I still say there's a risk that they didn't do the parallel testing?
The exam question would never be like that. The exam question is never going to be like that. There will always be a risk. Because obviously the examiner is going to give you this risk and he's going to state that no parallel testing was done. Or either he will say that the parallel testing was done for 2 months, 3 months. Always remember it has to be done for 12 months. If the examiner states that the parallel testing has been done for, let's say, 6 months, then I would explain that although the parallel testing has been done, but the time is not sufficient. In 6 months, the company may not have been able to identify all the errors that there might be within the system. Then that would have been my point. Got it? The exam question would never be like this, that the examiner is also saying that the parallel testing has been done and also saying that a new system is there. The exam question will not be like this. Okay,
So
got
what will
it?
it be like?
Yes.
What will it be like?
Just like the way we did right now. Just like the way we identified right now. There would always be a risk. In some way, there would always be a risk. Either the parallel testing would not have been done, or either the parallel testing would be, you can say, not enough. The time would not be sufficient. So you will be able to identify it very easily. So my question is, now let's come towards the response. What can be the response here? Can I give the response, a simple response that the audit team should discuss with the management that why haven't they done this parallel testing? We already know why they haven't done it, because they felt very confident that the new system is correct and very leading company has provided the system. So this response would be given nil marks by the examiner. Another kind of response, let me give you an example. Can I ask the management to give me some kind of breakup? No. Again, what type of breakup are you asking for? This is a system we are talking about at the moment. What is the most appropriate practical way to check out on a sample basis, and now I'm developing a question in my mind at the moment. Like, try to understand how does a student have to think about the responses when he has to give one. You should be able to develop the responses out of thin air in your own mind, out of thin air. How do you do that? Imagine you need to ask yourself this question. Right now, we are talking about a system. How do I check that even though the system has not been parallel tested by the management, right now the issue is not with the revenue and receivables, the issue is with the system itself. If I can identify any kind of error within the system, then my next step would be to move towards the current year's revenue and receivables. There would be an error in it. So what can I do to test or to check whether the system is recording correct things or not? An auditor can also ask the management to give them access of the system, and an auditor can manually enter balances within the system just to check whether the system is recording it correctly or not. Wouldn't that be a great idea? Because if the system is making error in those recordings, this simply means that the system would have made errors in the current year's revenue and receivable, and then in further on, they would be tested in detail. But in the first step, we need to check the system. Is my answer sufficient or not?
It looks sufficient. I'm waiting for your
Okay,
response.
great. It is sufficient. But let's come towards the hack that I provided you as well. Is this discussed within the hack? Let's check it out. Obsolete
It
inventory,
is actually.
NRB, cost up to date, receivable,
That's one extra thing.
profit related bonus, development expense, revenue, listing on stock exchange, new accounting system. Great. I've already explained this part. I didn't need to explain this part. Let's come towards this. The new system will need to be fully documented by the audit team, including relevant controls. Testing should be performed to ensure the closing data on the old system was correctly transferred as the opening data on the new system, and that transactions have not been duplicated on both systems and therefore included twice. Now,
I don't
this,
understand the first line.
yes, ask the question.
I don't understand the first line.
Okay, okay. What this response means is that the new system and the old systems, now there is also a risk, by the way, when the old system and the new systems are being run in parallel and parallel testing is being done in the new and old system, there is also a risk that what if the new system also recorded something and the old system also recorded the same thing. So the revenue would be duplicated and the receivables would also be duplicated. Both of them would be overstated. So this response is appropriate in that case. When parallel testing has been done, there is also a risk that what if both the systems have recorded both the things? Understood? But in this,
Wait.
that is
Let me write
not
that
the
down.
case right now. That is in this question, in this scenario, that is not the case. Parallel
You
testing,
said in parallel testing, there's also a risk that is duplicated in the system.
yes. If parallel testing is done, then there is a risk that both the systems would have recorded the things and it would have duplicated the amounts within the financial statements. This kind of response is appropriate in that kind of scenario, but rarely it is a very difficult type of risk. The examiner never asks this risk. I haven't even seen even one question in my all teaching experience where I've seen such type of a question, such type of a difficult risk. Okay. So what am I going to write down? I think that my response, which I generated, was correct. And that is what I'm going to write. So I'm going to state the auditor should ask the management to give them the access of the new sales system, and then the auditor should manually input balances to check whether the system is correctly recording those balances or not.
Or you didn't even write what you wrote over there.
Sorry, come again.
You did not write what you wrote over there. What you wrote on the thing. You
No,
didn't
no,
write
no,
that
no.
same thing.
You are talking about the hack?
Yeah.
You don't understand what was written there?
No, I mean like you didn't write the exact thing you wrote
No,
there.
I'm not writing the exact thing because I just explained that that is the response specifically when both the systems have been parallelly tested. Old system was also being run and the new system was also being run alongside. Then there is always a risk that The new system would also have recorded something, and the old system would also have recorded the same thing.
Oh,
So that is the appropriate response in that kind of scenario. That scenario is not applicable right now here. I would get 0 marks for that. Got it? Any
mhm.
questions?
No.
Great. So I need to complete my response as well. What if the system is not recording something correct? And if the system is making errors, this should be notified to the management, and then testing on sales and receivables should be done in detail. That's it. That they should be tested in detail, because then there would be errors in them as well. I am just making these things out of thin air in my mind. How? Because of practice. Because the more you do practice yourself, the more you write down answers yourself, the more you do that, the easier it is for you to develop risks out of thin air in your own mind. Got it? Can I move forward now?
Yeah.
Great. Let's move forward. By the way, how many risks I have identified within this simple thing? One, two, three. I'm done with three. So just by looking at what I have up till right now, I have identified the three risks and written about them. I also have three additional risks at my disposal if I need them, which I will write them over. So technically speaking, I only need to identify one more risk right now from the scenario. And if I don't have enough time within the exam, I can leave the whole scenario, because I've done my marks. I'm done with my marks. I've done all the risks. So let's identify one more additional risk right now, just for the sake of understanding. Look,
Well, identify all.
we are going to identify all, but how you are going to do it in the exam question, that is also something that you need to understand. You don't need to identify every single thing within the exam. Remember that. Let's read where we left from. Let's identify one more thing. Let's go towards that. Customers are able to pay for their goods either using cash or credit card. All right, there is no issue in that, no kind of risk in that. At the end of the working day, the store manager generates a report from each cash register, which confirms the cash taking. So basically, what is happening here, all the day we are making sales to customers. Either the customer will pay us in cash, or either they are going to give us that credit card and we are going to swipe it, and the amounts are going to come in our accounts. So whatever the case is, at the end of the day, the manager, who's the store manager, comes to all of the registers. What are the registers, by the way? If you go to a store, if you go to, let's say, Walmart, if you go to Tesco, there are different lines and you have to pay in those lines. You stand in those lines, swipe for your goods that you are buying. So those are basically known as registered. The store manager goes to each of the registered and collects all the cash and receipts against the credits that have been deposited within our account. So in total, he is summing up all the cash, how much sales we have made during the day. The cash is then counted and compared to the report. So basically, the system will make a report that this is the amount of sales that you have made. So exact same amount of cash and plus the credit receipts should be within the tills, should be within the register as well. Do you agree with this?
Yes.
Great. So the report which has been given to us by the system, and the cash and the plus the credit receipts, both added up, both of these should be equal. This means that everything is done. It is great. Nothing has been stolen from us. Our cash is in full. Our cash is not missing at all. Great. Since the new sales system was installed, head office now receives daily cash taking reports, which have shown an increasing number of cash shortages at each store. These differences have not been investigated or reconciled on the basis that they have been only small amounts. Well, let me tell you something very important, for just for your sake of.
That's an inherent risk. No, control of risk.
There is an internal control risk, yes. But what is the risk right now? What is the risk here?
Cash may be stolen, they won't realize.
Your cash is being stolen at the moment.
Yep, and they won't realize.
But what is happening at the moment? Your sales system is recording the amount of cash as well within your balance sheet. That this is obviously the sales system will generate a report. Apologies, excuse me, sorry. The sales system is going to generate a report, and from that report, the cash would be recorded within the financial statements as well, because the cash should be equal to that amount. Up till today, that was the case. The day you installed the new system, you found out that the cash is actually less than the amount of sales we have made. So in the previous years or in the previous months of the current year, we were overstating our cash balances as well. There is a fraud. I don't care about it. The auditor does not care about the fraud. The auditor care about the fact that because of the fraud, you were recording a high cash balance. Where is the cash recorded? It is recorded within the
Where did
current
the fraud
assets.
come from?
Sorry?
Where did fraud come from?
What is happening at the moment, by the way? Answer the specific question that what is happening. Understand the specific situation that what is happening at the moment.
Well, can I
The
hear
report is telling you to made a sales of $1,000, where on the other hand, all the cash combined is equaling only up to $900. So $100 is going somewhere. So you are saying to me that where is the fraud coming from? I am an auditor. I identify risks. I'm not saying that there is a fraud. I'm saying that there is a risk of fraud. But I, as an auditor, do not care about the fraud. What I care about
So
is
now
the
you're saying because there's cash shortage, the
yes,
report is
the
showing better.
cash is overstated at the moment.
How?
Okay, how are you going to record the cash balance, by the way? Answer this question.
Okay, me what I thought was going on is I thought like um the people are still stealing the cash, so the cash on the report is correct.
You are answering the question pretty much correctly, but you are getting one thing wrong. You are yourself stating right now that the people are stealing the cash. And the cash that is being reported on the report, that is incorrect, right?
That is correct.
Why is it correct? How would it be correct if the cash is being
So the
stolen?
report is automatic.
For example, give me 1 second. Give me 1 second.
Mhm.
I tell you at the moment that the total cash I have received, the report is showing me $1,000. You are going to record that $1,000 within your what? Within your statement of financial position, current assets, cash balance, right? Am I right?
Mhm.
Right.
Yes.
Now let's look at the actual cash. Let's look at the actual cash. It is less than $1,000. You have recorded $1,000. The actual cash is below $1,000. That is what is happening. Remember, the companies always write down every single thing based upon the reports that are generated, not based upon the counting up the cash. Understood?
Okay.
Great. Now, do you understand the risk that the cash balance is overstated?
Yes.
Great. So, my risk is going to be very simple again. The auditor does not care about any type of fraud. What he cares about is that any single information that is presented within the financial statement, it must be correct. In this case, the cash balance is not being presented correctly. So I'm going to simply state that there is this risk that the cash balance within the statement of financial position is overstated. And because of this fraud, any cash that has been lost, it should have been recorded as an expense. Yes or no? If I am losing something to fraud, that is now becoming my expense. Always remember this. You would
Wait, wait,
now
wait.
need to, what
Um,
is going to be the double entry if you find out that some of the cash has been stolen? How are you going to record it? You would reduce the cash amount by crediting the cash. And what would you debit? Debit the expense within statement of profit and loss. That is how it would be recorded off again. Understood? Just like inventory. Understood?
yeah.
So, okay, don't understand the latter part, just understand the first part. The cash balance is being overstated. That's
Okay.
got it. Now let's come towards my answer and write it down. There is a risk that the cash balance within the statement of financial position is being overstated. Is there any kind of standard linked with it? No. So I can ignore it simply. I just need to move directly towards my explanation of why I think there is a risk. And I already know my explanation very well. What is going to be my explanation? The above risks exists because of the new system, it has been identified that the actual cash or is always below than what the report states. So STATA states. So this means that the management in previous months would have recorded cash balances based upon reports which were overstated, Hence, the cash balances are overstated in statement of financial position SOFP. That's it. Got it? My explanation is also done of why I think that there is a risk. Now I need to come towards the breakup of it, the response, the appropriate response for this scenario. What is going to be the appropriate response in this scenario, by the way?
I don't even know.
It is a difficult one. Remember, within the exam, there is always going to be some types of risk against which response generation would be a difficult task. You will need to use all of your energy in your mind to generate a response against it.
Just conflict management.
Yes, but again, always remember this.
Can increase professional skepticism.
Come again.
Increase professional skepticism.
Great, well done. This is the most appropriate response in this case, that you should increase your professional skepticism, but I'm not going to stop there. I will also state that the auditor should increase their professional skepticism. And because there has been this kind of fraud within the company, the auditor should increase their sample testing within this area as well, so that the risk can be covered. Got it?
Yeah.
Got it? So it is very easy. Now remember, the same way you generated the response at the moment, always remember that these kinds of responses can only be developed with more practice. Don't be afraid of that. I'm unable to get the answer right now within my head. Practice more. Because of practice, you will be always able to generate the responses. They are not going to be difficult for you. Some way you will always be able to generate the right response for the question. So I'm going to write down the response. The audit team should increase their professional skepticism and also increase the samples within the cash audit, so that should also increase the samples within the cash audit, so that misstatements, so that the overstatements can be identified. Great. Now, my question is, why did you give me the first response that the auditor should increase their professional skepticism? My answer to that, I'm going to answer this question. My answer is that if there is a fraud in one area in the financial statements, there is also a risk that there might be fraud within other areas of the financial statement. So overall, for the whole audit, you should increase your professional skepticism. And for specific area of the cash that has been recorded within balance sheet, you should increase your sample testing right there. Got it? Any questions?
No.
Great.
No.
Now, how many risks I have written down, by the way? I have clearly written down 4 different types of risks. So basically, I'm done with the question, because after writing 4 risks down, what is the time right now? How much time I have taken to solve this specifically 14 marks question? Overall, this 14 marks question should have taken me 1.8 multiplied by 1.8, 14 multiplied by 1.8. Give me 2 seconds, please. 14 multiplied by 1.8. It should have taken me 25 minutes to completely identify and write down 7 different risks. And by the time you do a lot of practice, you will be able to do that. But let's say within the exam, I identify that it has already been 20 minutes. It has taken me lots of time just to write down the 4 different risks. I am simply going to skip these two portions, these 2 paragraphs that I have been given. Within the exam, as a student, I would skip those and simply write down the 3 risks that I have identified from this portion. Because I need to also manage my time as well. So my one risk would be upon the revenue and cost of sales. I would simply write down that there is a risk that the cost of sales within the statement of profit and loss is understated. Now, is there any kind of standard link with it? No. Why is it understated? It is understated because the revenue is decreasing by 15% during the current year, whereas the cost of sales has decreased by 27%. The cost of sales and revenue are linked with each other and both should have decreased by
Can you
all
write that down?
percentage. No, I'm explaining it because this is something that is going to be a homework for you. I'm
Wait,
explaining
wait, wait. Come on,
because
okay. I didn't hear what you said. What you were
nah,
saying before.
nah. If you expect me to explain every single thing and then you write it down, you need to also use your mind. I'm explaining it right now. But like
Okay,
you
explain,
can
explain
explain
it
it in
again.
your own words as well. You don't need to use my words, so much professional
Okay,
words.
okay, let's repeat it,
Okay,
please.
okay. My step number one would be my step number one in this case. What is it going to be? Step number one. I would state that there is a risk. What is the risk of under or overstatement? The cost of sales. The revenue does not have
It's
any kind of.
understated.
So I would state that there is a risk of understatement of cost of sales within the statement of profit and loss. Simply. Do I have an answer for step number two? Do I have any standard link with it? No. Let's move
No,
towards step number three directly. Why do I think
because
that there is a risk? I need to explain it in my own words. The above risk exists because the revenue in the current year has decreased by 15%, whereas the cost of sales has decreased by 27%, which is more than revenue. The revenue and cost of sales are highly linked with each other, and that both decrease in cost of sales should have also be in line with the decrease in revenue, almost in line with the decrease in revenue. But the cost of sales has decreased by more. Hence, there is a risk that to present a better picture of gross profit, the company has understated its cost of sales in the current year. I have explained the reason according to my own understanding. Now let's move towards the response. What is going to be the proper response in this case? There are
I
many
should
different
answer it.
responses that I give you. If I ask for a breakup, is breakup going to do anything for me? No, I'll ask for the breakup of this 10.9 million. That would only be 10.9 million. I would never know that why is it decreasing if I find out the breakup, because the management is going to give me the breakup of only 10.9. They are not going to tell me that what is happening with the remaining. So instead of writing this down, my answer would simply be that first I need, maybe I'm wrong in it. Maybe as an auditor, I might be wrong in it. Because this is something that I have done by doing calculation. So I need to discuss this with the management first, obtain an understanding from themselves, from them, that please explain it to us. Why is the cost of sales decreasing by more than revenue? Because if their explanation is not correct, then I would state, oh, now I need to go in detail. But if their explanation is correct, then I would say, okay, the management explanation is satisfying me. So I'm going to provide the response that the audit team should discuss with management and obtain a detailed understanding from the management that why is the cost of sales decreasing by more than revenue. That's that's it. That's all I need to write. Okay. The
Okay.
second risk which I've identified is within inventory holding period. Obviously, the inventory holding period is increasing. So I don't think that there is anything that I need to explain within this point specifically. This is something that I want you to do as a homework. How do you explain IS2 inventory might be old? It should be written off. It has not been recorded. I need you to explain in your own words, why do you think there is a risk? And you have to provide a response
Which
against.
one? For the inventory.
Yes,
Oh, yeah.
for the inventory as well, because it is very easy. And I've already explained it within the introduction. Sorry, within the explanation of audit risk, the previous lecture. Same is the case for the receivables right here. It is also very easy to explain. I have done it already, provided a very detailed explanation. This is also going to be a
Oh,
homework. You need to explain it yourself.
okay.
You need to provide the appropriate standard yourself. I know that
Oh,
there is no standard here, but you need to use the right points. And then you need to provide in your own words why there is a risk and then the response against it. Got it?
tomorrow we start a new topic, right?
Sorry, come again.
What do we do tomorrow?
But another question.
Oh, okay. So we're
Great.
doing a new
And
topic.
now
No,
remember,
not great. I thought we were
now
starting a new
remember,
topic.
please listen, first listen, listen. I have identified these risks right now. These risks are the one that I identified and I explained it to you and I asked you just to write it down yourself. So this is going to be the easy part for you, right? This is very easy for you because I have identified the risk. Remember, within the exam, the most difficult thing to do is to identify the risk itself. If you've identified it, it is very easy to write it. I have already done this explanation. You know that these are the risks and you will have to write down about them. There is no technical thing here. You are not doing anything new. But another homework that I'm going to give you, these two specific paragraphs, there are two risks hidden within these paragraphs. As a homework, you have to identify these risks yourself and explain it yourself as well. Got it? Before the next lecture, before you move towards the next lecture, you must send it to me that I have done it. Please review it. Got it?
I'll try, yeah.
Great. So see you within the next
Let's
lecture.
just start a new topic tomorrow.